All right. Hi, everybody. My name is Richard Lesperance. I go by the name of my man, Richard. Welcome to A Better Lifestyle. Today, I have the pleasure to have John with me. Please, John, introduce yourself because I don't want to mess up your last name.
Yeah, no worries. Yeah, my name is John Makarewicz. I'm currently president with Ferris Capital Partners, formerly co-founded and scaled up a residential real estate company called Mark Spain Real Estate. But excited to be here today.
Okay, great. So we were trying to record last time, so we had some technical issues. So today we should be fine. Uh, Today we're talking about the tariffs, and it's a good thing I was telling John before we could add another flavor to the episode because as we're recording now today on April 3rd, 2025, the tariffs went on at midnight. So the war is on, the trade war is on. Uh, so I know a lot of people are panicking and all that. So should we be worried about everything that's happening right now?
Yes, I think you should. Now, sort of, there's some things happening around the world that I think are important to kind of set the stage for. I'm trying to get into the psychology of Trump and his administration on this. I think they're approaching this problem I'm about to mention the wrong way. But tariffs have a place, right? There are absolutely times where tariffs make sense, and I think, for example, a number of years ago, when solar technology was taking off, the Chinese started flooding the market with solar panels that they were selling below cost. China has a hyper finance model. In other words, they dump a lot of money into their economy. They keep printing cash. And so that was causing a lot of pain for US based manufacturers because they're not able to sell things at below cost, right? It just, the math doesn't work. And so, there's times like that. EVs, right? We're seeing that with electric vehicles where similarly, China's selling these electric vehicles at such a cost that it would cause a lot of pain and suffering for US based industry in that market. So, tariffs have a place, right? I think the thing that's happening in the world that I wanted to touch on that I think is super critical to understanding the turmoil. And candidly, this is turmoil that was coming one way or another. And what's happened, just to back up, is that the baby boomers were the largest generation in the history of the world. We see population exploded post World War II, and if you actually look at what happened post World War II, really it was the U.S. coming into conversations with Europe after defeating Nazi Germany. We were still in war with Japan. But basically, at that time, the Europeans came to America and they assumed the Americans were going to say, hey, look, we're now your imperial overlords. We're in charge of Europe. And you're just going to roll up under the United States of America. But that didn't happen. They were actually very surprised. What did happen is the U.S. said, look, we're going to basically open our borders for trade. We want to buy, we want to sell, and we're going to make it very easy for you to do that. And the secondary factor was that the requirement, so to speak, is we're going to open up our borders for trade, but our military, our Navy, will be the police force patrolling the oceans to ensure that trade can happen unmolested. And so that was called the Bretton Woods Agreement. And that is really what has fueled, in my mind, and if you look at the numbers and talk to historians and economists, that has fueled the prosperity that we've seen post World War II, largely around the world. Now, when I talk about that, occasionally people say, well, gosh, there's still so much pain and suffering. I mean, obviously, there's countries in the world where there's effective almost slave labor, certainly indentured servitude, low wages. So I'm not saying it's all perfect. But if you actually look at the numbers, it's like the world has slowly gotten more prosperous, even in third world countries. You're seeing those some third world countries that are now second world bumping up to first world, much more sophisticated economies. But the challenge is that baby boomer generation had fewer kids, and then the Gen X generation had fewer kids, and the millennials had fewer kids. And so a lot of countries are actually going to have like a demographic collapse. China's a great example. So, Richard, the Chinese population 20 years ago peaked. And in about 10, 15 more years, it'll be about half the size as that it was at its peak. So when you have half the people in your country, you don't have enough workers, you don't have enough capital being generated to put back into the economy. So a lot of very intelligent people think China is going to absolutely collapse in the next 10 to 15 years. And globalization and free trade, even if we wanted to keep it going, will break down simply because there's just fewer people to buy products. And when there's fewer people to buy products, that's less capital coming into the market. That's less investable capital. So it's not surprising to me that the U.S. is taking sort of a U.S. first approach where we're saying we're going to circle the wagons and we're going to like really focus on the United States. Where I get very confused is why we're attacking places like Canada and Mexico. Mexico is our largest trading partner, and Mexico produces very high quality goods. In fact, their labor cost is now lower than China's. And so, if I were the executive of United States, the president, I would be looking to strengthen relationships with Canada, Mexico, South America, and make it easier to trade. The United States has some things going for it just purely from a geographical standpoint. We have more navigable rivers. We have more arable land. Navigable rivers, it costs dramatically less, like 20% or 20 times less to move a good and service over water than it does to move it over the road. So those navigable rivers have made trade very accessible and easy in the United States. Those rivers create arable land for farming. And we have a lot of capital. So the US will probably be okay in this coming turmoil of the demographic collapse. But it feels like Trump is, for some reason, trying to like accelerate this process. And I'm very concerned, candidly. I think that, here we are recording this at 10 a.m. on the 3rd, the day after these tariffs were announced, and the Dow Jones has dropped 1,200 points. The S&P 500 is down 300 points, other indexes are down 1,000. And so, we'll see. But now you've got guys from JP Morgan and very intelligent bankers that are saying they foresee a recession hitting this year. So, I can't get into the psychology of Trump and why he's doing this. And honestly, if you look at how these tariffs are being applied, it's not actually accurate. In other words, some of the tariffs he's claiming countries have against the United States aren't actually correct. And so we're retaliating with these higher tariffs, but they're not even based on any kind of reality. So I would just say I'm very confused right now. I don't understand the logic or the thought process behind this. If the goal is to get more manufacturing into the US, you have to recognize that it takes 10, 15 years to build out that kind of infrastructure and billions of dollars in capital. So, for example, if you're Nike and you say, you know what, maybe I do want to start manufacturing shoes in the US, it's going to take them 10, 12 years to get there. And then you factor in their stock price just cratered based on these tariffs. Now they don't have capital to even do that manufacturing build out. So it'll be interesting to see what takes place over the next few weeks. We felt it in March where tariffs were announced and then immediately pulled back. So it's anybody's guess what'll happen next, but I'm very concerned.
They're saying there's two questions I want to ask in one, but I'm going to go with the first one. They're saying like all this is going to cause short-term pain for long-term gain. That's one thing. So I want to know your take on that. And the other one, I was hearing like maybe my numbers are incorrect, but he was saying like by imposing the tariffs, it's going to generate like $6 trillion in 10 years or even maybe by the end of the year. So I'm not sure correct exactly if it's by the end of the year or in 10 years, but definitely it's going to generate income for the United States so America could be wealthy again. So what's your thought? What's your take on that?
I think it depends on who. So that is not incorrect in the sense that tariffs will generate revenue for the government, right? The federal government. And so Trump's view, and he said this, right? Like he wants to basically effectively replace income tax with tariffs. So, recently I saw something where there was even a potential proposal that he was going to put out to where anybody making under 150,000 in the US may not pay income taxes at the federal level. And so the reality of tariffs is that call them whatever you want. At the end of the day, it is effectively a tax on the consumer because businesses are not in the business of paying taxes and tariffs, right? That's a pass-through charge that will go to the consumer. So in other words, if they did something meaningful to the tax code that would help keep more money in the pockets of Americans, that would help allow them to absorb the increased costs of the goods that will result due to these tariffs. That's great. But at the end of the day, best case scenario, it's just a wash. And so instead of paying, taxes to the federal government through the IRS, you're paying taxes, through higher, prices on goods and services. But are you in a better position? I mean, there's a world that could exist. I mean, I saw one analysis that the cost of a new car, now, of course, this depends on the make and model and the price range that you're buying in, but anywhere from $4,000 to $14,000 more for one car. And, so yeah, I've saved on some taxes, but now that car I need to buy is $4,000 more expensive. Oh, I saved on taxes, but now my groceries are 25% more expensive. So, have we really solved the problem? Because the biggest issue in my mind facing America today is we are eroding the middle class and the working class. So many people live paycheck to paycheck, and wealth keeps pushing upwards into the top, really 0.1%. You look at the top 1%, and certainly they're feeling the wealth grow. But, number of years ago, we had a handful of billionaires. Now we have like 750 in the United States alone. And so I'm not the type that thinks like billionaires shouldn't exist, but I do think it's problematic when the production that's happening in the United States, our efficiency, the level of productivity continually increases. And I'm just making up a graph here, but say it's like this, but wages are like this. So there's this big gap here. So American workers are producing more output, but they're not getting the gains from that output. And so it's not to say we need to, tax billionaires out of existence, but we need to have a more level playing field, because ultimately, if people can't afford to buy things, then how do we fuel the economy? I mean, this is a consumer driven economy, and the United States relies on people having free capital to not just pay their rent and, to barely scrape by, but to buy TVs, to buy cars, to buy services, to go on vacations. That's how the economy really functions and works. And once again, post World War II, we saw an explosion in the size of the middle class, and we had this prosperity where 40 years ago, the average American worker owned a home, probably one or two cars, could pay for their kids' college, and could take one or two vacations a year. That is almost the thing of the past. And that's what's scary to me, because ultimately we need consumers consuming in the economy for this thing to really work. And if you're going paycheck to paycheck and barely able to scrape by, there's just not enough money going into the economy. So from a capitalist perspective, you want a strong middle class that have the free capital to buy your products. And so that's where I'm a little lost on this. I think that this is going to severely punish the working class. It'll absolutely punish the middle class, but the super wealthy, it'll barely be a blip on their radar. And so, once again, I'm not a wealth distribution guy. I'm a capitalist through and through, but I need people that can afford to buy my products, right? And so that means we need to do more to protect that working and middle class in my mind. So I just, I absolutely could be missing something here. And I do think that these tariffs will force U.S. companies to re-examine their supply chains and how things are done. But that's not a quick and easy process. Once again, that's a multi-year, probably 10 to 15-year process to build out that infrastructure. And here's the other sad reality, Richard. If we bring this manufacturing back to the U.S., it's not going to create the jobs that we think it will. It will create jobs, but a lot of this will be done with robotics, right? And AI. And so, what have we really done here if we made it, fewer jobs, more expensive, and wages keep depressing? It's, in my mind, going to lead to a potential calamity for the United States if not something's done soon.
Yeah, something you just mentioned in regards to robotics, I wasn't thinking about that. And I know the main purpose is to bring manufacturing back to the United States. But that's a good point that you're touching in regards to robotics. So we'll see how it plays out in the end. So they say a lot of people saying that Trump is not for the middle class; he's more for the rich and all that. So we'll see what's going to happen.
Yeah.
But in regards with, so I'm going to continue. So on his first term, because I'm just educating myself now on American politics and all that, and I know it's important in our daily lives, and people should get educated because it affects their lives. In his first term in 2016. Were tariff imposed and did it work?
Yeah, in fact, they were, but they were imposed more thoughtfully. It was kind of what I touched on at the top of the conversation, where they were applied to countries like China with hyper finance models that were flooding our market with cheap products that they're selling below cost. And so tariffs are absolutely a tool in any country's toolbox to manage the flow of goods and services, to control pricing and things like that. So tariffs in and of themselves are not bad, but I think blanket tariffs applied somewhat recklessly can be. In other words, there's a thoughtful approach to this, and then there's sort of the slam it and jam it approach, and that's what we're experiencing now. Once again, I'm not an economist, and there's certainly things that I'm unaware of, right? I know just enough to be dangerous here. So I've got to be very careful. But, at the end of the day, there is maybe a thought process that Trump's administration have of why not just rip the Band-Aid off, cause some short-term pain to get to that eventual place we want to get to. So what I do is just, very similar to what you just said. I just try to educate myself. So I'm going and looking for experts. And one of the things that I think is a problem, certainly in America, in the United States, but across the world is, social media, right? Our algorithms feed us what we already believe in, right? It's sort of this, vicious cycle, if you will. So if you're a liberal, you're going to get all this extreme liberal content. If you're a Republican, you're going to get all this extreme right-wing content, and it's just pushing us further and further to these extremes. So I share that because I'm very mindful to not go down that rabbit hole. In fact, I spend very little time on social media. I subscribe to the Wall Street Journal, the New York Times, the Washington Post. I try to get varied opinions. The Wall Street Journal tends to be more of a Republican focused, New York Times more liberal focused. And so, I find guys like Peter Zeihan, who's an author and studies demographics and, the kind of worldwide economy, and just try to follow key people. On LinkedIn, I'm following some very intelligent folks, the JP Morgans of the world, the Morgan Stanleys, and just looking for their insights. So I try to broaden my view. So I'm not just looking at my perspective. Right. And so what I'm seeing is this slam and jam approach. Yes, it may cause some temporary pain, and maybe at the end of it all, it's a better place. So I'm not counting that out. But I don't know if enough is being taken into account once again for the working class and middle class. And this is just the reality, right? But when you look at, say, for example, what happened last year as the Fed was lowering interest rates or deciding whether to lower interest rates or not, they talk about this stuff. It's no secret. But they're like, employment is too low right now. Like, in other words, are too high, I should say. Too many people are employed. So we may actually need to put some people out of work to calm the economy down, because inflation, if, too much money's pouring into the system too quickly, that causes inflation. Now, the real dirty secret is the United States pumped $7 trillion into the economy during the time of the pandemic and soon after. And so that has created the inflation. Yeah, you can look at supply chain and all that. That was certainly a factor. I think corporate greed to a certain extent was a factor. In other words, companies normally don't lower their prices. So if they had a temporary supply chain issue, they raise their price, and then that supply chain issue clears up, they don't lower their pricing and they keep it high. So a lot of these food companies, oil and gas companies are having record profit years. And so, who I'm thinking about right now is the working class. I mean, shoot, man, teachers, firemen, police officers, we actually call those hometown heroes at Ferris Capital Partners. In fact, at our apartment buildings, we create special kind of incentives for those types of folks. Nurses, once again, not doctors, but nurses, firemen, police officers, teachers, people that work really hard and are the backbone of our country, but don't really get paid a whole lot. If you're making $52,000 a year and these tariffs impact pricing, all of a sudden, your ability to buy products and services and just to live your life have immediately been impacted. So, it goes back to, this is really going to heavily impact the working class and the middle class in a way that I don't think people are fully comprehending quite yet. Because think about it, nobody buys a car cash, very rarely, right? I mean, maybe the top 1%, right? But you go get financing. Well, right now we have super high interest rates. Now, if you look over a 40-year average, 6 and 7% rates is actually about average. So, we were spoiled by very low rates for a number of years. So let's be clear there. But at the end of the day, rates are higher. And now the cost of that car has gone up to potentially $14,000. So think about just in terms of how much interest you're going to pay over the life of that car. So it's not just the cost of the car, but the cost of the financing, because rates are also high, and then the cost of the car is higher. And so you're just going to be paying out more in interest. So it's just, everything compounds here. The cost of groceries is going to go up. I mean, we do make a lot of our food in the United States, but we import a ton of food. Most of our fruits and vegetables, are coming from Mexico and Canada. And it's what happens to the cost of groceries? So, even if you cut their taxes at the end of the day, people are going to be spending a lot more than they're saving. So that's what concerns me. I think that this temporary pain is going to be really felt. Yeah, in my stock portfolio for a couple of years, we're going to feel it with a recession. The value of my portfolio is going to go down. But, my portfolio, I don't plan to touch until I'm 65 and I'm 44. So I got 21 years to think about that. So I don't even look. I just let it kind of ride. And, I have a great financial planner. So for me, I'm not sitting around. I mean, I'm stressed, to be candid, because I own a business and I need that business to keep running. But, who I'm really worried about, once again, are those working and middle class people that are really going to feel this in their pocketbook.
So switching gears a little bit. So is in the last couple of years, were regulations, were there a lot of regulations in regards to real estate in the real estate industry?
So the government in the United States has actually generally taken a pretty favorable look on real estate. So there's actually a lot of really good tax incentives to own and operate real estate. So, for example, we're able to depreciate the asset over 27 and a half years. There's actually something called cost segregation, where if you invest in, say, and I'll use an apartment building because that's what we do, but a third party group will come in and they run an analysis of the property. And so they separate out the personal property from the real property, real being the actual building and then the land itself. Personal property and commercial real estate can be your cabinet boxes, your countertops, your sinks, really anything that is something we can put in or take out. So it's interesting, in residential real estate, those things are considered part of the real property, but in commercial, they're not. And so we can separate out the value of, once again, the cabinets, the countertops, all the fixtures and everything, and we can actually depreciate those at a faster rate. So real estate has always been, at least in my 44 years, been treated very favorably in terms of an investment. You've got tax incentives. Candidly, real estate tends to always appreciate, the Great Recession being the one example where it didn't. But if you look at the cost of real estate, it actually tends to rise above or right with inflation. So it's actually a really good hedge against inflation, because if you think there's going to be a lot of inflation going on, investing in real estate will just help protect that, because once again, the values tend to rise alongside inflation. And then in our world, we improve the asset itself. So we force appreciation through renovations and things like that. So yes, the United States, and I mean, look, Donald Trump's a real estate guy at the end of the day. A lot of our senators and Congress people got their start in real estate. And, on the residential side, the National Association of Realtors is a huge lobby. And they lobby aggressively for real estate friendly tax incentives and, sort of a friendly view of the real estate industry from the eyes of the federal government. So I don't expect anything negative. In fact, I would actually expect to see things like the opportunity zones, which was an initiative Trump put in place in his first term. Typical of a lot of bills, there was a sunset on that. It has sunsetted, but I assume that may be coming back, which is basically a way you can invest in a deal that's in an area, say, for example, just outside of Atlanta, maybe a more industrial area, and the cities identify that as an area they'd like to turn over and redevelop. So it gets turned into an opportunity zone, and then investments within that area have some very nice tax incentives. They're 10-year holds. There's a lot of rules. We don't need to get into them. But I suspect we'll see things like that come back, actually making it more favorable to invest in real estate under Trump. That's an assumption just based on the fact that he's a real estate guy. These first couple of months, there has not been any talk of this stuff. I think the focus has been on the tariffs and the trade and things like that. So we'll see what happens over the next, 3.5 years. But I expect to see potentially some more favorable things come out for real estate, specifically real estate investors.
So what about international investors? Like, let's say I'm from Canada. Let's say someone wants to invest from Canada into the United States, or even if someone is from the United States and wants to invest outside of their borders. What's your take on that? What would you say about that?
Yeah, so in fact, a lot of our investors at Ferris Capital Partners are Canadians. Now, basically, there's some things that we have to do on our side because we are actually a Canadian and a US-based company. We have headquarters in both countries. We just have to structure our deals in a very specific way. Otherwise, that Canadian investor could potentially be subject to taxation on both sides of the border. So we do that, to be very clear. So we have the right structure. It's approved in Canada. So our Canadian investors only pay taxes on their capital gains in Canada. So if you're an investor listening to this and you're in, say, another country and you're thinking about investing in the US, you want to just be very intelligent on that subject, ask a lot of questions, and maybe even talk to a tax attorney in your country just to confirm whatever sort of structure needs to exist to avoid that, because that could happen in any country. But I know Canada very well, and that's why I'm specifically speaking to it. the way I view it is that diversifying into the US dollar, if you're in another country and thinking of investing in the US, is a safe bet. US dollar is sort of the global currency, and it has performed very well. I do wonder, with these trade war that could potentially break out, how does that impact the value of the US dollar? We'll be watching that closely. But no different, right? I'm in the United States, and my financial planner comes to me, and we look at my portfolio. Now, when I'm speaking to the financial planner, that's just actually my public investments, stocks, bonds, things like that. But you're probably aware of this. There's good common advice to say, you want to have some growth, you want some income, you want some international in your portfolio. You want to have like a well-balanced portfolio. So I have about 20% of my portfolio invested in international companies, right? So real estate's no different. And I think the United States, outside of the Great Recession, has had an incredible track record with real estate. And by the way, 90% of millionaires and billionaires invest in real estate. So, I'm kind of one of these guys that it's like, I'm not the smartest guy. I'm probably about just maybe slightly above average if I'm being generous. But at the end of the day, like when I go see 90% of millionaires and billionaires doing something, I pay attention, right? And so I am heavily invested in real estate alongside the public markets. Here's the thing with real estate, at the end of the day, is that they're not making more of it. You can't move it. Yes, there are some things. If a storm came through, you could lose a portion of your land, but at the end of the day, you own that land, you own that asset. And with that, there's something I like about that. And then with apartment buildings specifically, or it could even be like a storage facility, or it could be, a retail center. The thing for me with apartments is that people will always need a place to lay their head at the end of the night. Shelter is a core human need. So while you may see, some fluctuations in a market if there's oversupply in terms of rent growth, if you actually look at the history of the United States, the only time rent has actually gone down was in '08. It went down minimally, a couple percent, but then in '09-10, it started climbing again. So even with the Great Recession, where real estate values in terms of, residential single family homes stayed depressed for a number of years, rent kind of started growing again in '09 to 10 to 11. So, it's one of these things where, for me, you get the tax benefits, you get all this stuff. So as a foreigner, and going back to Canada and your original question, they do have depreciation. It's just not as favorable as in the United States. So one thing Canada has recently announced, now this is actually the gentleman who's running for office. So he's not in office yet. They have an election coming soon. He's from the Conservative Party. He's running for prime minister. He's basically suggested that he would like to propose something that says because Canadians invest a lot of money outside of Canada. I mean, it's actually the majority of their investable money is outside of Canada. And so he's saying, hey, look, if you bring money back into Canada, we'll let you waive your capital gains. Almost like in the US, we have what's called a 1031 exchange. It's kind of that idea where as long as you invest that, you exit an investment in the US, say, for example, you bring that money back to Canada. This isn't a law yet, but this is what's been proposed. You reinvest that money in Canada and you won't be subjected to capital gains during that time period, only when you exit that future investment. So, that's an example where Canada is saying, hey, look, United States is imposing tariffs on us. We're not really particularly interested in being friendly with them anymore. So we're actually going to incentivize Canadians to bring their capital home and invest it in their own country. So that will actually have an impact on US-based investments, right? So it just goes back to, I think that the approach here has been a little too rapid fire. There is a place for tariffs. They're not all bad. It's just a more measured, thoughtful approach, I think, would have been called for here versus a blanket, everybody gets tariffed. And, look, if you actually look at the world right now, and this is actually sort of goofy, but I saw someone this morning type into ChatGPT, what would be some potential causes for World War III? And number 2 was a trade war, And so I don't think Trump's trying to do that, to be clear, but it's just, people need food, people need shelter, people need these things. And at the end of the day, if, they can't get access to it in other parts of the world, fighting starts, right? Famine is one of the number 1 causes of war. Just it is what it is. I mean, just look at history, right? If people can't feed themselves, they get really frustrated, they get really angry, and they start picking up whatever weapon they can get a hold of, right? And so that's where I'm thinking a little bit about, are we accelerating something in such a way that it's going to create more pain than necessary? And that's my view of it. But once again, I'm just a guy who just reads some newspapers and tries to educate myself. So don't take my word for it, but that's how I'm feeling.
Where are some places people could get educated on tariffs and the economy, like economics?
Yeah, great question. So I'm a big reader, as you can probably see behind me. So whenever I'm frustrated or stressed or curious about something, I just try to find a great book on it, right? So there's an author named Peter Zeihan, Zeihan. He's written a number of books. He actually has a Patreon. If you subscribe to the Patreon, I think it's like $10 a month. You get a daily video every day on what's happening in the world and the news. He's talking a lot about tariffs today, but his material comes out for free a week later. So if you go to YouTube and search for Peter Zeihan, he's talking a lot about the demographic stuff I talked about in trade and globalization. Ray Dalio, great resource. His book Principles is an awesome book just on the economy at large and, kind of the principles of how the economy runs. I'm a big fan of Warren Buffett and his business partner, Charlie Munger. Of course, Charlie recently passed away, but I've been reading their biographies and like memoirs and books written about them, just trying to, learn more about these really intelligent people. And then LinkedIn is a great resource. I've really gone through my LinkedIn. And if you don't know, in the top corner, you see like these three little buttons. You can actually click and like basically tell the algorithm to show you more of that material or even set up notifications. So I follow a lot of the big banks. They're releasing economic reports from time to time. And so I try to read through those. Podcasts like this one are a great resource, right? The key factor is like, I'm just a guy, right? So anything I've said, you need to go out and independently verify, right? Like I've looked at things, I'm reading the newspapers. This morning, I'm picking up the Wall Street Journal and reading what they're saying and what are business experts saying. But don't take my word for it. Like go out and do your own kind of research. But I would say, reading is the best place to start. Big fan of Peter Zeihan, who I just mentioned. He'd be a great place to start just in terms of what is happening in the world that is not going to change no matter what anybody does because of this demographic collapse and what that could potentially mean for the world. But one thing I've learned is nobody has a crystal ball. What generally happens is when an event occurs, say the Great Recession is a great example, we go back and we find the one or two people that kind of predicted it. And we go, oh, all the signs were there. We knew this was coming. But in reality, there was 150 other people that were completely wrong. I mean, look at the Great Recession. A lot of very intelligent people were saying there's no issue here. There's no problem. The mortgages are great. Everything's going to be fine with these mortgage-backed securities. And then all of a sudden it wasn't, right? So it's hard to predict. Well, let's say it's impossible to predict the future. And so I think for me, what I like to think about is what can I control in my daily life that will make my world and the people around me's world a little bit better. I can't control what the federal government does at any time. I can't control whether the guy I wanted to be in office or the gal I wanted to be in office got in. All I can control what's right in front of me. So, for example, at Ferris Capital Partners, we're looking for where is there opportunity here. Higher interest rates actually mean that deals will trade at a lower value. So does that mean we can maybe pick up a couple of good deals? Can we be thoughtful in our resident experience to make sure we're taking care of our residents and helping them navigate this situation? So, for example, one of our properties, it is a more working class community. And so we worked with our vendors and basically some local farms to do a monthly farmers market. And then every resident, because our vendors sponsor it, gets $50 a month in free food that's being paid for by the vendors. And if they want to buy additional things, they can do that, but straight from the farm. So, just little things like that where I'm like saying, okay, how can we make these people's life that I can touch because they live in a building that I own's life a little bit better? So I think if everybody kind of took that approach, it's like we can almost push out the noise a little bit of the federal government and just focus on what's right in front of us and how can I make and I know it sounds cheesy, but how can I make the people around me in my own world just a little bit better, And I think if everybody did that, we'd have exponential returns at the end of the day. Going back to Trump and everything with these tariffs, I mean, once again, this stuff started the day he got into office. Tariffs were announced, tariffs were rolled back, tariffs were announced, tariffs were rolled back. Some think that a lot of this is just his negotiating style, like he's going to cause a lot of pain and frustration. And then all of a sudden, everybody steps up to the plate and says, hey, we're willing to do X, Y, Z to get away from this. So maybe there's something there. I don't know. It doesn't feel that way just because it's happening so randomly, but there is a negotiation strategy that's potentially at play here. So time will tell. So what I'm trying to do is not allow it to impact my frame of mind. Like I said, I'm a little stressed out, but now I'm going, okay, it's where we're at. What am I going to do about it? How are we going to solve for this within my company, within my family? And so, a couple of weeks ago, I had a sense this was coming in early January, and I talked to my financial planner and I said, look, like, If we have a stock that's maybe down a little bit and there's an opportunity to harvest some tax losses that I can leverage, let's sell and let's hold that money in cash. So I did not liquidate my accounts, but I just took a look at it with my financial planner and decided we can get rid of this, we can get rid of that. But I have stocks in blue chip companies that have been around a long time, and I have no doubt in 10, 15 years, it'll all be fine. As you probably know, it's time in the market, not timing the market. So I'm taking that approach, but just try to be smart where you can. So hold on to a little more cash and things of that nature. And if you're just getting started, be thinking about savings on day one. I think that's what a lot of people miss in their 20s is they start making a little bit of money and they start having a lot of fun. And then they look back in their 30 and they're going, shoot, wish I'd saved a little bit more money. So, set up some automation where if you're just getting going, a certain percentage of your income is just sweeping into investment accounts. That's how we need to be thinking. We can't rely candidly on Social Security anymore. I don't think Trump's going to get rid of it, but I think if you're realistic in 20, 30 years, it may not be around like it is today. So you got to be taking care of yourself. So that's how I'd be thinking if you're listening to this is like, what can I do to control my own situation given the world that we live in?
All right. Thanks, John, for being here. Definitely, we're going to do a part two because I want to talk more about certain things in the real estate. So thank you, everybody, for taking the time to listen to this podcast, and we'll see you on the next episode. Bye.